In this video, I'm going to show you the first stock I would buy as a beginner if I were just getting started in the stock market, and do this all very quickly to honor your time. So I want to go over some broad ideas, some reasoning behind why I believe this is a great strategy for a beginner. And then at the end, I'll reveal the ticker symbol. But before we get to that, we just need to first set up the reasons on why, in my mind, it's a great spot for a beginner to start. The first thing you need to understand for the strategy is all about a dividend. Now, I'll put a link to this video down below if you want to go into more of the details of what a dividend is, but I'm going to keep it very surface deep, like I said, so I can keep us moving quickly. But a dividend is basically a thank you card that is sent to you with money inside. It's a way for a company to say, hey, thank you for investing into our stock. Thank you for holding onto our stock. And if you hold on, we are going to send you money for doing nothing else other than holding the stock. So it's a thank you card with cash in it. So that's what a dividend is. But let's think about it. What sort of companies are going to be able to do this? Companies that are losing money hand over fist? Of course not. It's going to be well-established companies that are not only making money, that are not only breaking even, but having all sorts of profit. Because you got to have profit first before you can start sending out thank you cards with cash in them. So that's a very important distinction, is companies that not only are making money, but making enough money to send out those thank you cards with cash in them, which again is called a dividend. So that's the first key point here. But now I want to take this a step further. Let's try to put ourselves in the best and strongest possible spot as a beginner. So sure, you got to make money, as I said, to send out those thank you cards. But to be fair, it's sort of easy for some companies to do that when the markets are doing great, when everything's fine, when there's no recessions, when there's no anything like that. Well, sure, being able to pay a dividend, don't get me wrong, it's still impressive because you are making money, but it's not that impressive because, well, yeah, a lot of companies are making money when the economy is very strong. But what if there are companies out there that paid dividends even through the bad times? So what you see here on the screen is a line chart from basically the 1950s all the way to present day. And there are, in each one of these, the gray sections here represent a period of a recession. So in other words, there have been several recessions over the past several decades. Probably one of the most famous that at least I lived through and remember in trading was right there. There's the real estate pop right there, the financial crisis, 2008, 2010, when things got really nasty. There was, for a little history, the dot-com bust right there. And then, yes, there was plenty of other recessions, but, the dot-com bust, and then the real estate crash right there. And then, COVID was right there. Never counted as a recession because, things snap back so quickly. But the idea here is that over history, there have been lots of recessions, lots of nasty periods. But what if I were to tell you that even during some of these really nasty periods, there are still companies out there that pay dividends? That would be pretty impressive, right? That even during the bad times, they were still able to send out those thank you cards with money in them. Those are some strong companies, right? I mean, to not only be still making money, but making enough money to send out cash to their shareholders as a thank you, that's very, very impressive. But there's still one more thing that we can do to make this even better. Now, the next part here that I want to clarify, whoops, did not mean to do that. Let's bring that back up to, there we go. But the next thing here is I'm going to start to talk about things a little differently. So I'm still going to say stock, but in all actuality, to get the terminology right, it's an ETF that I'm talking about, which stands for Exchange Traded Fund. But in summary, that just means it's a collection of stocks. It's a way to track a collection of stocks, more than one, which as a beginner is a good thing, right? We want some diversity. We want some diversification with multiple stocks, but you can get that diversity of essentially, quote unquote, owning multiple stocks if you own just a single ETF. So that's what I'm going to be showing you, is an ETF that I would say to buy. Now, what is the goal of this ETF? Or in jargon, what is the investment objective? So let's just take a quick inventory check here. We are looking and focused on dividends. Why dividends? Because those are companies that send thank you cards with money. But not only that, we're looking for companies that are able to send those thank you cards with money during the rough times, during the recessions. And now we're adding in this, which this investment objective, this ETF is going to give us this. Stocks of companies that have a record of increasing dividends over time, meaning that not only are there companies out there that can pay dividends during the bad times, but every year they're paying more and then more. So another year goes by and even more. How awesome is that? Not only are companies sending out the thank you cards through the tough times, but even though tough times are going on, the following year, they're still sending those thank you cards, but even with more money in them. So we want these situations where the dividends are increasing over time. Now, as a beginner, there's one thing you need to notice with ETFs is there is going to be a fee that's associated with it. But here's the awesome part about this ETF is in total, the expense is 0.06%, meaning it's a drop in the bucket. If you look at some mutual funds, other ETFs, you're going to see that this number here is much, much higher. But in this situation, 0.06%. So I can't sit here and say that there's no fees, but there's basically no fees. So what is the ticker symbol? What is this quote unquote stock? Again, technically speaking, ETF. Well, let's reveal that right now. And the ticker symbol right here, the name of the fund, the Vanguard Dividend Appreciation. Again, that's the keyword, the Appreciation Index Fund, ticker symbol VIG. So if I were a beginner, if I were getting started, I would buy VIG for the reasons denoted. Strong companies that not only send those thank you cards with money, they increase them during even the bad times. And as a beginner, I think that's a great spot to put yourself. Now, of course, as you get more advanced, as you learn more, as you research more, then yes, you can branch out into other stocks and ETFs and so on. But like I said, as a beginner, that is where I would start with VIG. I hope this helps. If you have any questions, anything like that, leave those down in the comment section below. If you enjoyed the video, please hit that like button. Check out other videos on the channel. I'd love to have you as a subscriber. But yeah, get out there, look into VIG. And if you don't even have a broker yet, I'll put a link down below to a broker that will allow you to access VIG and buy it. And this broker has 0 commissions. So if you're new to the point of not even having a broker, not even having a way to buy this stock, like I said, just check out the link down below and I'll give you a link to that also. But hopefully this helps. Get out there and get some VIG. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.